Hello everyone and welcome to the lesson. Today we will study the civil and criminal tax investigations in Kenya. These are two distinct types of inquiries that are conducted by the Kenya Revenue Authority to ensure compliance with tax laws and to identify any individual or any corporation that does not comply with the tax laws. So this lesson we will tackle both civil and criminal tax investigations. We will study the procedure, okay, or the process of a civil tax investigation as well as the criminal tax investigation. So we'll begin with civil tax investigations. Now, candidates, a civil tax investigation, first of all, is conducted to determine whether a taxpayer has correctly reported their tax liability. All right? It is primarily it primarily focuses on assessing the accuracy of tax returns and collecting the correct amount of tax due. And the consequences typically involve the imposition of additional taxes, penalties, or interest. So, in other words, civil investigations do not result in criminal charges or imprisonment, but can result in substantial financial penalties, and they often arise from unintentional errors or from instances of negligence. So civil tax investigations are conducted, I repeat, to determine whether a taxpayer has correctly reported their tax liability. So when Kenya Revenue Authority carries out civil tax investigations, it primarily focuses on assessing the accuracy of tax returns. Then after which it goes ahead to collect any correct amount that was not collected initially. Do you understand? So, civil tax investigations in Kenya, we can also say, are conducted by the Kenya Revenue Authority to ensure that taxpayers are complying with the tax laws and regulations. And these investigations are typically initiated when KRA suspects that a taxpayer has underreported income, it has overstated deductions, or has failed to file tax returns. And there is a process that the Revenue Authority follows in carrying out civil tax investigation. And that's the process we are going to outline in this lesson. Then we look at briefly the penalties. So the process. What are the steps in this process? Process of civil investigation, tax investigation. Process of, what is the process of civil tax investigation in Kenya? First of all, we say that the investigations are carried out by the Kenya Revenue Authority. So the first step is notification. Notification. Now, candidates, Kenya Revenue Authority here will notify the taxpayer of investigation, and then provide them with a brief explanation of the reasons for the investigation. Before the tax authority carries out investigation, first of all, the authority notifies the taxpayer of the intended investigation. The Revenue Authority also provides the taxpayer with a brief explanation for the reason for the investigation. Then the second step is for the Revenue Authority to request for information. Request for information. Now, where the Revenue Authority suspects that a taxpayer has not complied with the tax laws, the Revenue Authority requests for information from the taxpayer after notifying the taxpayer of the intention to carry out an investigation. So the Revenue Authority will request that the taxpayer provides documentation to support their tax return. And this documentation may include financial statements, bank statements, invoices, receipts, and so on. Receipts, invoices, bank statements, financial statements, and so on. Request for information from the taxpayer. Moving on to the third step, that is after requesting for information from the taxpayer, then number 3, review of information. The Revenue Authority requests for information from the taxpayer, which could be receipts, invoices, or bank statements, or financial statements. Then upon receiving this information, then the Revenue Authority will review the information that has been submitted. The KRA will review the documentation provided by the taxpayer, and it may conduct further inquiries, such as interviews. This is interview with the taxpayer. It may also conduct reviews with witnesses and so on. After reviewing the information, after reviewing the documentation that is submitted to it by the taxpayer, then the authority may seek further inquiries, may seek further information, such as interviews with the taxpayer. Number 4, audit. Audit. Now, the findings from the examination of information received from the taxpayer can then be used to do what we call, to get what we call audit findings. Let me just call it audit findings. Audit findings. All right? Here, candidates, based on the review in step number 3, review of documentation, review of information that has been submitted, which could be the receipts, invoices, bank statement, and so on, the Revenue Authority will issue an audit report outlining any discrepancies or errors found in the taxpayer's tax return. After examining the documents, after examining the information, then the Revenue Authority will give an audit report, what we are calling audit findings. Then number 5, after generating an audit report, then the next step is tax assessment. Tax assessment. If the revenue authority determines that the taxpayer owes more tax, they'll issue a notice of assessment. They'll do what? The revenue authority will issue a notice of assessment. Here, the taxpayer will then have an opportunity to object to the assessment if the taxpayer so wishes. So the taxpayer can either agree with the findings and maybe pay, or if the taxpayer is not an agreement, then the taxpayer can raise an objection. The taxpayer can, at this point, raise an objection to the assessment that is issued by the revenue authority. You understand? At point number 5, the revenue authority will issue a tax assessment. That is where the revenue authority determines that the taxpayer owes more tax. The revenue authority will issue a notice of assessment, which the taxpayer can either agree to or disagree. If the taxpayer disagrees with the assessment of the revenue authority, then the taxpayer will have an opportunity to object to the assessment, which will lead to 6, dispute resolution. Dispute resolution. If the taxpayer disagrees with the assessment, they can appeal to the Tax Appeals Tribunal. The Tax Appeals Tribunal. If the taxpayer disagrees with the tax assessment, then the taxpayer can lodge an appeal to the Tax Appeals Tribunal. Now, the tribunal will then review the case and make a decision. This tax tribunal will hear the case and then make a decision. And this we've stipulated clearly in our other topic related to dispute resolutions. So candidates, that is the process of civil investigations in Kenya. Number 1, notify the taxpayer. The revenue authority notifies the taxpayer. Number 2, the revenue authority requests for information from the taxpayer, which could be in form of receipts, invoices, bank statements, financial statements, and so on. Upon receiving this documentation and information, the revenue authority will review the information and maybe seek for further inquiries, like having interviews with the taxpayer or interviewing witnesses. After that, in step number 4, the revenue authority generates an audit report where comes up with the audit findings, right? Based on the review in step number 3, the revenue authority comes up with the audit findings in an audit report, to which the report, we are talking about the audit findings. Based on their review, the revenue authority will issue what we call an audit report outlining any discrepancies or errors found in the taxpayer's returns. Then step number 4, we have the tax assessment. If the revenue authority determines that the taxpayer owes more tax, they'll issue a notice of assessment. Then in step number 5, we'll have dispute resolution. If the taxpayer disagrees with the assessment, they can appeal to the tax appeals tribunal, which will then review the case and make a decision. So that's the process of civil tax investigations in Kenya. And there could be penalties for civil violations. And these penalties vary depending on the seriousness of the offense or the severity of the offense. And the penalties could be back taxes, where the taxpayer who owes more tax will be required to pay the back taxes plus interest and penalties. The penalty could be fraud penalties, where taxpayers have fraudulently maybe underreported their income. They may be subjected to a fraud penalty, which could be up to a certain percentage of, say, 75% of the underpayment. Another penalty could be civil damages. Taxpayers here will file what we call frivolous tax returns, where taxpayers file frivolous tax returns. They may be liable for civil damages. They may be liable for civil damages. So those are some of the penalties: back taxes, fraud penalties, then we have civil damages. That's all we can say in relation to civil tax investigations in Kenya. Let's now move on to criminal civil investigations. Criminal civil investigations. This is criminal tax investigations. Criminal tax investigation. What are criminal tax investigations? Now, a criminal tax investigation is pursued when there is a suspicion of willful or fraudulent activity that is intended to evade tax laws. And such investigations are aimed at gathering evidence to potentially prosecute the taxpayer for offenses such as tax evasion, filing a false return, or failing to file a tax return. So the intent here must be shown, the intent must be shown to prove criminal activity. And convictions in criminal tax investigation can result in significant fines, penalties, and even imprisonment. And these investigations are conducted with the assumption that a crime has been committed. And in Kenya, candidates, criminal investigations here in Kenya, the investigations are conducted by the Directorate of Criminal Investigations, the DCI. All right? Criminal tax investigations in Kenya are conducted by the DCI. So what's the process of a tax investigation? Process. Criminal tax investigation. Process of criminal tax investigations. What's the process of criminal tax investigation? Now, the process begins with a complaint. There has to be complaint. And the DCI may initiate a criminal tax investigation based on a complaint either from KRA or from any other government agency, including member of the public. So the criminal tax investigations begin with a complaint either from KRA or government agency or member of the public. Complaint of criminal tax investigation. We've defined criminal tax investigation as willful or fraudulent activity that is intended to evade tax laws. And we've said that such investigations are aimed at gathering evidence to potentially prosecute the taxpayer for offenses such as tax evasion, filing a false return, or failing to file a tax return. So it begins with a complaint either from the Kenya Revenue Authority or from a government agency or from a member of the public. Then after a complaint, then there will be investigations. Investigations. The DCI will conduct thorough investigations, which may include gathering evidence, conducting interviews, obtaining search warrants, and so on. If the directorate gathers sufficient evidence and in its view it has enough evidence to prosecute, then prosecution will proceed. Prosecution. If the DCI has sufficient evidence to support a criminal charge, they will forward the case to the office of the office of the Director of Public Prosecutions, or DPP, that is Office of Directorate of Public Prosecutions. The DCI investigates. DCI. If the DCI has sufficient evidence, then the DCI submits a file to the office of DPP. Do you understand? The office of DPP will then prosecute the case. If the DCI has sufficient evidence to support a criminal charge, they will forward the file to the office of the Director of Public Prosecutions. Then there will be court proceedings. Court proceedings. The office of DPP will decide whether to prosecute the case in court. If they do, the taxpayer will be charged with a tax crime and will have the opportunity to defend themselves in court. Court proceedings. So in a nutshell, that is the process of criminal tax investigations in Kenya. We've said one begins with a complaint, either from a government agency or a member of public or the revenue authority. The second step is to investigate the matter, and the investigations in criminal tax investigations are not done by the revenue authority like the civil tax investigations. Rather, it is the work of the DCI to conduct investigations, and if the DCI has sufficient evidence against the taxpayer, then the DCI submits the case or the file to the prosecution. The office of the DPP will then prosecute the case in court, where the taxpayer will have an opportunity to defend himself or herself. And there are criminal tax penalties if the taxpayer is found guilty, like fines. A taxpayer convicted of tax crimes may be fined or imprisoned. A taxpayer convicted of tax crimes may be imprisoned for a period of 5 years for each offense, or fined up to, say, 2 million shillings for each offense. But it's important to note that taxpayers have rights during both the civil tax investigations and also the criminal tax investigation. A taxpayer has rights. And one right could be the right to remain silent. Taxpayers do not have to answer questions from KRA or from DCI. Another right is the right to an attorney. Taxpayers have a right to have an attorney present during questioning by both KRA or the DCI, because in civil tax investigations it is the KRA that carries out the investigations. The taxpayer in civil tax investigation have a right to remain silent, have a right to an attorney. Another right is the right to fair hearing. Taxpayers have a right to they have a right to, say, appeal the decisions made by KRA or the decisions arrived in court. They can have a right to appeal. And in conclusions, candidates, it is important for taxpayers to be aware. It's important for all taxpayers to be aware of their rights and to seek legal counsel if they are under investigation by either the Kenya Revenue Authority or the Directorate of Criminal Investigations. So these are summary of civil and criminal tax investigations in Kenya. We've given the process of civil tax investigations in Kenya. We've also given the process of criminal tax investigations in Kenya. Before we wind up the lesson, I'm going to give you an assignment. So candidates, here is your today's assignment based on what we have learned today. Question 1. What are the primary differences between civil and criminal tax investigations in Kenya? And how do these investigations impact individuals or entities under scrutiny? Number 2. How does the Kenya Revenue Authority determine whether tax issue warrants a civil investigation for non-compliance versus a criminal investigation for suspected tax fraud or evasion? Number 3. What legal rights and obligations do individuals or businesses have when under civil investigations by KRA, and how do these differ from the rights and procedures in a criminal tax investigation? 4. In Kenya, what are the key consequences of penalties for individuals or businesses found liable in civil tax investigations compared to those found guilty in criminal tax investigations? 5. How do civil and criminal tax investigations impact the relationship between taxpayers and the tax authority in Kenya? And what measures can individuals or businesses take to navigate these investigations effectively? So attempt the 5 questions before we meet in our next session. Bye-bye.